This is Trent Primmer from Barclay Pearce Capital in Sydney. This is 3 stocks for your portfolio for the end of 2020. Pendal Group, they're an Australian company which is engaged in the provision of investment management services. They operate through 2 key segments, which is their investment management business in Australia, which is PDL Australia, and outside of Australia, which is obviously PDL International. They've identified product development and particularly impact and ESG, improved data, technology capabilities, and increasing global distribution footprints as areas with the most potential for their business. Following this strategy, it obviously requires a multi-year investment, and Pendal, they're expected to fix costs for the financial year by between 8 to 10%. The strategy itself is expected to deliver a more cost-effective model and increase their funds under management by around 50% by 2025. Newscorp, they're a global diversified media and information services company who operate under some of the world's most recognisable brands, such as Wall Street Journal, the Dow Jones, the Australian, Herald Sun, Foxtel, to name a few. They've continued their drive to be a more focused, more digital company with the aim of generating enhanced returns for investors in the months, quarters and years to come. They've experienced higher revenue in many of their segments during the first quarter and a 21% increase on year-on-year in profitability despite the economic consequences for COVID-19. So they do have a reasonably robust and adaptable business model. Increasing digitization is helping the company considerably, so we rate them as a buy. Fletcher Building Ltd. Fletcher delivers building products, construction materials and services across Australia, Asia, North America, Europe and New Zealand. On the 10th of November, they reported EBIT of $227 million for the first 4 months, ended 31st of October, which is an increase of about 55% on the previous corresponding period. Previously, the market was expecting about $381 million for the entire fiscal year 21 period. So obviously shows that they're massively exceeding market expectations, and we see an uptick in their customers, which are pointing to volumes remaining at current levels through to the start of the new calendar year. So we rate Fletcher Building Ltd as a buy. That wraps up your 3 stocks for your portfolio for the end of the year. It is a good time to get a portfolio review, so please feel free to contact us on the link below if you'd like one, and please have a safe and happy holiday. Thank you.